Hey, good morning, everybody. Hey, welcome to Friday, the first week of October is about to be uh, done. We've had a rough week this week, and it continues to look like we're going to follow through with that even today. At least that's what it's looking like on the futures market. We'll have to see what Dave has to say about some of that stuff when he comes on board. Hey, but I do want to remind you, hopefully you'll never forget, like I'll never forget, what 2008 felt like, how it affected your retirement savings. And think about it now. It's 10 years, 11 years later. A lot of you are already getting ready to retire now. So if we had another 2008, it would be very impactful on your retirement savings. So I want you to get this free report, Understanding Market Corrections. Text the word market to 863-285-3815. That's the word market to 863-285-3815. We also have a lunch and learn and after work learn coming up this next Thursday. Call the office 382-0037 to get registered for that. Hey, Dave will be with us here in just a moment.
5.7 Light FM, American Authors there, and Morning Dave. It's 8:41, and it's time to check in on Wall Street to find out what's happening with your retirement funds. I think I'm going to get the Dramamine concession for Wall Street. I could probably make a killing on it after a couple of really crummy days. We managed to climb 122 on the Dow yesterday. It doesn't take back what we lost, but nice to see green ink. Let's see if it'll continue this morning. Let's check in with Phillip Statler down at Statler Financial Services in downtown Sebring. How does that Dramamine concession grab you as a good investment, Phillip? I would think it'd be a good one.
Given where we are and what we've seen this week, I think you're right, Dave. It's definitely been a lot of ups and downs this week.
Yeah, I don't even particularly like roller coasters, but good Lord, the financial ones have been just absolutely terrifying and exhilarating all at the same time this week. And we start this morning out with the data dump that we've been kind of building up to all week. And the jobs report comes out, 136,000 jobs created in the economy last month. They revised the last 2 months up, which is good news. And our official unemployment rate is the lowest it's been since the end of 1969. At 3.5%. I remember back then, basically every able-bodied boy and man was getting dragged off to be cannon fodder in Vietnam. So that was an artificially low number at the time. So that's an absolutely amazing number.
Yeah, it really is. Now, depending upon whose estimates you look at, I saw economists, they came out with numbers anywhere from 143,000 to 150,000 is what they anticipated in new jobs, and it came at 136. So the current month was a miss. However, the markets are really liking the fact that they revised the last 2 months upwards. So we're seeing the delayed quotes are down, but the current quotes right now are up. Well, they've dropped off their highs, but they're still up from where they were.
That's good to see. With the current number missed, seeing the former month numbers going up, that kind of gives you a little bit of a reassurance that so far the track record isn't going to indicate this quarter that we're entering a recession yet. And that's the part that we always have to say, yet, right?
Well, right. And, you got to kind of wait till you see the GDP numbers, which based on what we're seeing, I don't anticipate them showing us in a recession based on what you and I have seen so far. But who knows where they'll actually end up? Will they be, higher than the 2% they were last quarter? What's that number going to look like? And I think everybody's kind of waiting for that.
Absolutely understood. The other item that came out was something that happened yesterday, but it was a market mover as it was. Day before, we had the ISM Manufacturing Index, and the shock value to that, and part of the reason that we've had such a precipitous fall is the fact that when that index number falls below 50, it indicates a contraction. The manufacturing number fell below 50, and that gave a lot of investors a bad case of the willies. Yesterday was the service sector number from the ISM people. I gather it was down, but it was still above 50, huh?
Yeah, it was. They expected it to come in at like 55.3. It came in at 52.6. So it was a miss in that number. But you're right, it was above 50. And so it didn't really drag anything down yesterday in the market.
I didn't actually see the release with the number itself, but I was kind of following it on my cell phone as far as how the markets were going. And at the release time, I saw a downtick, and then things just started climbing back up again. So we ended up with, okay, a 0.5% gain on the Dow, a full percent gain on the NASDAQ, and about 0.8 of a point gain on the Standard & Poor's. If we weren't following up a 3.5% drop in 2 days, I'd say yesterday was a pretty good day on balance.
Well, yeah, it definitely looked good yesterday. I mean, better than what we'd seen the last 2 days, that's for sure. But it still is not enough to put us in positive territory for the week.
That's true. Everything being relative, a small dumpster fire would be better than the first 2 days of the month.
Yeah, we got a substantial way to go to get us out of the red for this week.
Absolutely true. We do have a little bit of an indication from at least one major retail name that reported anyway. Costco ended up giving us some numbers, I gather.
They did, and they beat on earnings per share by about 15 cents a share, which sounds good. However, their revenue and comparable same-store sales came in well below the estimates as the retailer continues to cut prices, trying to defend their market share in that whole warehouse retailer section of the economy. And so that's hurt them a little bit, and they're trading down this morning about 1.4%.
I would imagine Costco has got to be at an interesting war. I noticed that they were off, so when you said they beat some of the numbers, I was confused which shoe was going to drop and do that. That's an interesting sector. Not only do they have a battle to the death with Sam's Club and the Walmart people, but there's a whole lot of discounters on the internet side, so they've got both a brick and mortar war and an internet war going in that sector as well, don't they?
Oh, they do, because they have to really beat on both fronts, right? They have to be lower than the guys sitting up there in cyber space, because somebody's going to click a button rather than go to the store if it's cheaper.
And Costco has a record. If they can't get something for the price they're looking for, they'll just go ahead, say to heck with it, and manufacture themselves, which in the past has been a pretty good record, but that's a pretty high capital way to defend your market share.
Well, it is. You're right. That's labor intensive. It's capital intensive. So it's one of the ways you don't want to have to defend your market share, because it's going to hurt your bottom line eventually.
Understood. I was reading an article that said that they're factoring in like a 90% chance of another interest rate cut for the Federal Reserve meeting on the 30th of this month. We're sitting on the 4th of the month, and we're already talking about interest rate cuts. That's going to make for an interesting month on the gossip front of the financial markets, isn't it?
Well, it is, Dave. And I think that part of that service, that ISM service number, was one of the things that I think started that, even picked it up even more, because it missed. They think that added more fuel to the fire for the Fed to lower interest rates at the end of this month.
And I'm reading columnists basically saying that they generally are feeling like the Fed is doing a decent job of watching things and responding, not overly ecstatic and not overly dramatically, but kind of keeping watch. We might actually have a Federal Reserve that's managing the economy outside of its history of overreacting and underreacting.
Well, that's true. We've been talking about jobs today, and I saw that we've got somebody came in. HP came out, and they came out, and they're going to reduce their workforce by about 9,000 workers.
I was reading that that's one of their latest, let's say, reorganization of HP, and their stock is suffering pre-market as well.
Yeah, and so that's it's going to be interesting to see how that plays into the whole deal when it comes to the unemployment numbers, what workers look like, what new jobs look like. That's just kind of adding some more fuel to the fire that we've seen here lately.
Absolutely. So we got unemployment rate at a 50-year low. We added a disappointing number of jobs this month, but more than we thought we did last month when we were not unhappy with it before. Put it all into a big ball. We're 45 minutes before the market opens up, Phillip. What do the futures look like this morning?
Well, I'm going to say, Dave, they're falling again. So here's what's happened this morning so far. When I first looked at these this morning, all of them were down significantly. Dow was down like 80 points, 85 points. When the jobs number came out, the Dow bounced back to positive by about 75 points, positive. And now we are back down to about 16, a gain of about $16 on the Dow. So starting to lose it, go the other direction. S&P 500 right now is basically flat. NASDAQ is up 0.1%. And so all of those guys are just barely holding into the green from where they were. Crude oil's up about 1%. And then we've got gold and silver both trading down. Gold is still above 1,500 though, 1,508 an ounce. But we've got silver dropping down about 1.25 to $17.45 an ounce.
Now, I noticed the crude oil is, well, down from yesterday, but up from last night. It's under $53 a barrel, which is into that range where as long as it holds in there, okay, our oil wells will do all right on this side of the pond, and we'll pay less at the gas pump.
Well, that's true. It's up about 1% from yesterday's close, but still, if it can bounce between 50 and 55, I think we'll be happy.
Yeah, that keeps our industry happy and at the same time keeps us at affordable gas prices at the pump. Overseas markets, mixed markets in Asia. Hong Kong is still going through their domestic disturbance. The Japanese market's up. Europe generally following suit from an up day for us yesterday. They're generally up midway through their trading day. Phillip, advice always needed on stabilizing a retirement fund is upsy-downsy as we are. If I got to retire in the next couple of years, I need some predictability. How do I get a hold of you?
Hey, give us a call at 382-0037. We've got our free report on understanding market corrections. If you can remember what 2008 felt like, hey, you want to make sure you're protected and you understand what can happen. I mean, a lot of folks are now 10, 11 years later, they're ready to retire. They can't afford that again. So get our free report on understanding market corrections. All they have to do is text the word market to 863-285-3815 to get that free report. And then we've got a lunch and learn and an after work and learn coming up this next Friday. Call the office to schedule and register for that. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
Alrighty, and back here on Monday morning to find out what the Sam Hill goes on over the weekend, because the other guys are trading even when our markets are closed, right?
That's right, man. You have a great weekend, and we'll talk to you then.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Of all the questions you get asked every day, this is the one you should.
Hey, folks, thanks for joining us today. I do want to remind you again, one more time, about our free report, Understanding Market Corrections. You need to be ready in case we have another 2008. To do that, text MARKET to 863-285-3815. Call our office to register for the Lunch and Learn and After Work and Learn, 382-0037. Have a great weekend, and I will speak to you again on Tuesday. Have a great one.